Hi, good evening, everyone. Welcome back to the channel. So I'm really excited this evening because I have kind of had an epiphany in terms of my own financial knowledge. So most of you know that I don't really use margin at all. I have like in case of, emergencies and markets dropping and all that, but I have started to see the light and I've started to see how you can actually double your returns with margin. And believe it or not, I'm starting to feel a little stupid that I haven't been doing it given the trade gains and the dividend income I've been making this year. So, and I'm by no means an expert in margin. So let me be clear about that. So I'm learning this myself as much as some of you all are. So what we're going to do a little tutorial on margin. And then we're also going to go over some scenarios with ULTY and MSTY. Well, let me let you all vote. What do you all want first? Do you all want to see the numbers first, or do you all want a tutorial? Because I want to just explain, and a lot of these YieldMax funds have different like requirements, different percentage requirements depending on the broker. I know when we were in New York, a question came up asking if they could work with the brokers to lower those requirements so that people could make even more dividends. But nonetheless, uh, remember to smash the like button, comment away, and let me know what you all want to see first. I'll take silence as that I decide first. Oh, tutorial first. There we go. We've got our first comment of the evening here. Vladi gets the gold medal for the evening. Okay, so since we have a vote, hold on. Oh, we got two more that popped up in here. James Tebow, presumably related to the famous Tim Tebow, right? Okay. Uh-oh. We might have a tie. Numbers first, Excel spreadsheet with example of a million. How'd you guess? How'd you guess that was what I had? But don't you have to pay back the margin first, or am I wrong? Well, if you manage your money properly, because here's the thing. To be honest with you all, I'm just going to be very blunt when I say this. A lot of the videos I saw on margin before, and I'm not going to name any names, but people that are smart can use some deductive reasoning. But I've seen a lot of idiots on here talk about margin, and they did not know what they were doing, and it was dangerous what they were talking about, like very dangerous because it was like blind leading the blind. But there are several really good channels on here, and I'll mention one. Todd Aiken, he absolutely knows what he's doing, and he's very good at what he's doing. So I watched part of one of his videos today, and I'm starting to see the light that there's tools in the arsenal that I'm personally missing when it comes to maxing out my rate of return. Yeah, we know how to use margin, right? I don't want to name any names, but there was some like dangerously unprepared, I don't want to say unqualified, but just uneducated videos on the subject, and it honestly kind of turned me off of it because it's like, oh, get a home equity loan, put it all in Tesla. That would have been a disaster. Anyway, okay, so we're going to go over the numbers first. So what I want to show you all is the potential of margin. So to answer your question, Ralph Beans, um, when you're trading options, um, and well, let me say this first. When you're trading options, um, you don't owe the margin. Actually, if you win the trade, you end up like not owning the margin at all. Now, let me be clear here, folks. If I mistakenly say something, because a lot of you in the comments are quick to grill me, you leave those like very trite, very pointed, like one sentence comments that say like a factual statement, and it's like that knife just digging in. Like it's like Ulti didn't start paying weekly until, and it's like basically saying like you're stupid in one sentence. So I feel the pain when you all say that. So I want to be clear that I'm by no means an expert in margin, so it's highly probable that I'm going to say something misinformed or inaccurate in this video. I'm just forewarning you all. So when you leave those comments, maybe make them a little nicer. Okay. So yeah, what I'm saying is based on what I know. Nice picture, by the way. I've heard use margin like a sniper. I'll even give Oracle credit. He seems to know margin really well. Um, Yeah, so and that's another way, that's part B. The dividends would go straight into the margin. So yeah, just take the dividends and pay it back. But hey, if you've got a $500,000 account and you can double that buying power, why not? And I have two accounts over that balance, so why not double that power? Let's see. Have you seen K Gold Curve trying to outperform the price of gold? That's interesting. We got to get that guy back on here. The CEO of Curve Funds, Howard Chan. We got to get him back on here. All right, folks. I've been rambling enough, so let me go ahead and get into the actual meat of the video. because I know that's what you all want. You want red meat in terms of dividends, red dividend meat. All right, so I'm going to go over MSTY and ULTY as an example. So you all know I've put together my $1 million example here, and hopefully, who knows, it could be worth $1 million to somebody. If it ends up being, just don't forget your old Uncle Coach here. So with margin, double your income, right? So who's not fired up about this? If you're not, comment that I think margin sucks. I want to know if there's somebody on here that thinks margin sucks and they're not like fired up about this. But if you are, definitely smash that like button and comment away. So what we did here, going back to April, think about this. Okay, you were getting dividend payouts of, and I didn't even use the right column actually. So D divided by C. Hold on a second here. Um, this was the price divided by payout divided by price. This is as though we reinvest. So instead of that, let me take this one and watch this. Watch this, folks. We're going to double. The example is actually even better. So we're going to double our income. So in the first month, we had 159,000 in dividends. So we're going to double it. Look at this. Now this is 318,000. So you see what we did here? We just took our dividend income and doubled it. So watch what the sum of this is here. So basically, the sum of this column here, F2 to F18, ignore that. But the sum over here, $2,075,000 and change on $1 million investment. And we've got to add another one because we just had a dividend declared. But anyway, for purposes of this, just focus on what we're talking about here. So basically, look at this. Every month, we could be getting up to like 427,000 a month in dividend income. Who's not fired up about that? So that was over the course of 17 months. So the average is almost $250,000. Can you imagine that? Like an executive director salary in a month. Like you got to work a whole year for that. On the high end, that's considered a really elite salary, but that's in a month on $1 million with margin. How incredible is that? So 2.6 million if we oh, ignore that, never mind. So what I did, I took this rate here. These were two scenarios with MSTY. If we if the price stayed about where it is, 2.6 million, and then if it got back to where its high point, 44.80, 5.5 million. But with margin, you're talking between 5 million and 11 million. You're talking about doubling what you had in dividends. Same thing here with ULTY. Even though ULTY, it went to weekly, which I strongly suspect that MSTY might go to weekly as well. But you accelerate, even if you're reinvesting and you're compounding, think about how fast you accelerate that reinvestment with margin. So in your first month owning ULTY, 318,000 or 319,000 almost. Second month, hold on a second here. This was A23 divided by, yeah, this was like the first month. So then second month, 110,000, third month, 146,000. I mean, these are crazy. These are like full-time salaries. And then when it switched to weekly, March 13th, instead of getting 5,300, you're getting 10,600. You're getting over a $10,000 weekly dividend payment on $1 million invested very quickly. Now, what I want to do here, watch this. Say that you invested, and I need to do this column over here. Say you invested in ULTY on March 13th. Let's real quick go to ULTY's historical price. On March 13th, what was ULTY trading at? Let's see. We were trading at like 624. There we go. So watch this now. So ignore, because I know we like to ignore the past, right? We only want to focus on where ULTY is right now. So it was, what did we say? 624, right? So imagine, and I was supposed to have this every week here, but imagine investing $1 million right now, when it changed to weekly. So 1 million divided by $6.24 is, watch this, 160,000 shares. Now on 160,000 shares, think about this. I'm going to go ahead and just basically truncate this over here. So hold on here. I want to basically copy this number and then paste it in these paste values only. There we go. Perfect. All right. So on 160,000 shares, watch this, folks. This is going to be incredible. This is going to blow your minds. This would be 74,000. Oh, that was before it went weekly. Ignore that one. So we want to do it this one. This is actually going to be um, on this many shares. It's going to be this times this. That's 16,426. So we're tripling. If we had made the purchase of ULTY in March instead of when it first went public, we're tripling our dividend income there. See that? So basically, every week we're making $16,500 weekly on one ETF, $1 million in one ETF. So if we summate these, just watch this. This is only like not even half of the year. Let me do equal sum. It's only some of the year. So we would already have 307,000. So that would be a 30% return. And what is it? Basically March, April, May, June, July. So we're like 4.5 months. So this is only basically, we'll say 4 months out of the year. So we could actually times this by 3. And so basically our $1 million, we would be getting almost 100% rate of return by using margin. See how we accelerated that from where we were to where we are now? If we just bought it in March at the bottom, basically, and it's stabilized since then, you've got totally stable, no share fluctuation. This isn't with dividend reinvesting. This is just taking the money. $307,000 in dividends since March. So you would have your whole investment pretty much recovered by by the end of the year, and then just pay margin off. So use it as a vehicle and just pay the margin off, right? So I'm starting to come around on this subject here. The lowest margin, I believe, is either on Robinhood or on Interactive Brokers. I actually applied for Interactive Brokers, but there's some hidden fees and stuff that basically, if you use their information and stuff, like you're paying hidden fees. So I think Robinhood is still actually the lowest. What's this here? Sprint Trip Recap. The more you have, the lower the rate. Okay, thanks for replying. Which broker? Lowest margin. Yeah, see, I told you already. Canada. MSTR will go up faster. Well, that's how typically a covered call strategy works, right? Can we go by more realistic numbers, maybe 100,000? Yeah, it's very simple. There's a key secret to doing 100,000 instead of a million. Just basically take off a decimal point. So if you want to do that, um, it would be like 92,000 instead of 922,000. It would be 300, and it would be 30,756. In fact, I'll do that. Watch this. Just in this case, divide by 10, basically. I'll do this for you just since you asked nicely. Now, if you didn't ask nicely, I wouldn't do it at all. I wouldn't even consider it. But since you asked nicely, I did it. So 30,756 off of 100,000. Annualized, it would still be a 92% rate of return. So percentages are what's important, because forget the unit of money. The percentage is what matters. Did it seem like we took a larger drop out of our YieldMax ETFs this week? SMCY MSTY took a big hit. Was this a normal drop after the payouts? Um, Good question, because the underlying SMCI has had a great week. So let's look at that real quick, because these shouldn't have had too big of a drop off. SMCI for the week, if I share over here, welcome. Okay, so SMCI, and we're for some reason we're dropping again, even though earnings are coming. I just made maybe a dumb trade on this, but over 5 days we're up. We started the week at 56.10. We're flat, but I mean we should be okay because we're up 20% over a month. MSTR, we're also up, I believe, over the past month. And MSTR and SMCI, I think these are solid stocks. Like I think these are not going anywhere. We're down this week in MSTR. Okay, so I don't know why it dropped more. I was thinking that, based on the performance, but both of them are up, and SMCI is significantly up. Your margin interest rate would be higher. So the more money you have, the lower your rate's going to be. I know it seems unfair, but that's just how it works. People with more money get better rates. Like they say, the rich get richer, the poor get poorer. And it's a mindset. I want you all to understand, if you don't take anything else away from this video, mindset is very important. You will find most people that stay in the same spot financially their whole life, a lot of it is up here. I hear people in my own family, they're like, "Oh, I don't want to take big risks with money." Well, guess what? Then you're not going to get rich. If you want to get rich, you've got to take big risks. You've got to This is where I get philosophical because I'm very passionate about this. Poverty, there's a quote that says poverty is a mindset, and it could not be more true. When people sit around, they focus on what stuff costs. They focus on, "Oh, well, they get old, they're like my social security check's only going to cover this. Oh, I'm old, I don't want to, take this risk or that risk." Even if they're not old, people tend to stay in the same rut their entire life. That's what I want to break. That's the mindset I want to break. That's why I used to call myself life changing financial coaching, but I call it life enriching because it does enrich your life. But that's something I'm very passionate about, folks. And since I've got like 54 of you on, I'm going to be a little philosophical. Poverty is a mindset. To be wealthy, you have to change what's going on up here first. And some of you may say, "Oh, that's BS. What about this? What about that?" You attract what you think about the most. Believe it or not, your thoughts are powerful. Your subconscious mind is powerful. What you think about the most is what you attract. So if you think about not having money, if you think about lack, guess where you're probably going to be? You're going to be in a lack reality because that's your mindset. Now, I'm not saying go act as if you're rich and blow all your money. Be smart about it, but you've got to have the mindset to attract what you want. Well, as far as psychology and financial psychology, you could just listen to me ramble, right? Rambler? Play on your name there or your screen name. What's your picture? Is that like a starfish or something? Yeah, there you go, Bob Proctor. So that's another genre talking about mindset and all that. There's an entire rabbit hole to go down there. There's plenty of tapes and stuff on YouTube. I will say, any of y'all that have ever watched the McDonald's movie with Ray Kroc, you'll notice he didn't become fully successful till his 50s. But what was he doing? He was listening to mindset tapes, subconscious mind, power of the subconscious mind, um, success tapes, and stuff like that. If you watch that movie, The Founder, great movie by the way, highly recommend. You'll notice he's in his hotel room on the road and he keeps striking out on sales deals, but he keeps listening about persistence, mindset. And then finally he puts it all together and he becomes like one of the most successful people ever. Oh, it's an octopus. I knew it was some kind of a shellfish, or well, that's stupid because octopus is not a shellfish, but I knew it was some kind of a marine aquatic creature. Let's just say that. I'm not all over the map. I'm actually highly focused. In fact, that was a side rant. So my what you think is scattered is actually all part of the strategy. So let's go over here now. Now we're going to explain margin because that's what you all really tuned in for, right? Most of you, it's funny, most of you don't like philosophy. You just want what's my yield max dividend, and I'm over here telling you, hey, I just closed out $20,000 in options trades wins, and you're like, what's my yield max dividend? I'm like, all right, today I made 25,000. You're like, what's my yield max dividend? And I'm like, dividends are great and all, they're phenomenal. It's like the ninth wonder of the world. But, options are great as well. So, all right, let's go over here now. Where was I? I hope some of you all appreciated my philosophical rant at least. All right, now we're going to jump over to a Reddit article over here. Um, And by the way, if you all want a one-on-one coaching session, I do offer that for $100 an hour. You can see all my trades and my exclusive strategy and what I'm doing, and it's been going very well this year. I also share a lot in Discord too. All right, so here's a person that decided they finally jumped into the world of margin buying ulti. They decided they were going to go head first and dive in with margin. So they had about 4,000 shares of ulti. They wanted to test the margin waters a bit, so they bought 3,000 more shares on margin with Robinhood. They're using about 20,000 a margin of 64,000 available at a 5.5%, which by the way is the lowest. Uh, with Robinhood, gold cost about $92 a month. That's not bad at all to borrow that amount of money. That's not bad at all. Even if Ulti drops to 5 cents per share and distributions each week, they'll still make $600 every 4 weeks, producing an overall profit before tax of 508. So it's another way to make money, which I'm talking about, other ways to make money, right? So using margin, it's costing him $92 and he's making a net profit of 508 every 4 weeks. If it stays around 9.5 cents, then he brings in $1,140, which is still over $1,000. Ulti would have to drop to 50% or more in order to get called by margin. So the only question is, why am I not buying more? And I agree. And the market we're in right now, it makes sense. Now, if the market turns bearish, I would caution a little bit because you don't want to get margin called. Now, even though I don't use a ton of margin, I've actually been partially margin called before with some of my options trades. My broker said, "Hey, you need to deposit another 5,000 today, or you need to deposit another 3,000, or else we're going to have to liquidate some positions." So even though like, and I'll show you my account too, because margin again, it's something that I won't profess to be an expert on by any means. Um, but if I go to Schwab, and I'm sure I'll get a lot of, I'll open myself up to some Monday morning quarterbacking here. Ooh, the market must have really tanked in the last hour. So I'm going to my Schwab account. Bear with me. Remember, there's always a method to the madness or a madness to the method. It's one of the two, but it's somewhere in between that. Okay, so what? I gotta look real quick now. Oh, SMCX tanked at the end of the day. Wow, that is nuts. Hmm. Let's see. Hmm. We're down to we dropped to 64.50 in the ETF SMCX. All right. All right, so let me show real quick. I'm going to show my balance sheet over here on my individual account. So this is what confuses me because I've asked the broker a couple times, like as far as margin and all that. So it shows me right now because I have several options trades open. It shows me that I have like 149,000, and that it's like under margin right here. Now I have a certain amount of collateral I have to maintain in order to keep these options trades open. So you'll see I have these short positions right now. And as far as actual investments, there's not a lot invested right now, but I've got margin equity of 510,000. And then as far as like withdrawable cash and stuff like that, it confuses me a little bit because I'm not doing what all these gurus are doing when it comes to margin, but it seems like I do have it. So with that being said, absolutely. So if you want to come to my Discord and email me, my email is lifechangingfinancialconsults@gmail.com. I know it's a mouthful, but absolutely. Hit me up on either Discord or email. And yeah, let me know. I'd be happy to do that. I think people are finding a lot of value in these, and it's like kind of like lighting a torch and spreading, like lighting a candle and spreading it, lighting someone else's candle. The more people learn this, the more people are making money and prospering, and that's what I like to see. He says all he does is rant. I'm living out of my Fidelity account and using margin has been working so far. Yeah, fire. That is fire right there. Round of applause for this guy. Hello, thanks for the channel. What is the excess liquidity level to be considered safe? Again, I'm not an expert on it, but I'm gonna quickly become an expert on it. Let me just say, SLTY inverse of ULTY. Yeah, I'm looking forward to that one. All right, let's go back over here now. And while some of you think I'm unfocused, to the contrary, I'm quite focused. All right, let's see real quick if there's any market moving news tomorrow. So I'm going to go over here to the site called Forex Factory. So we didn't get the rate decision we were looking for from Papa Powell. Today we had core PCE, we had employment costs and unemployment claims. By the way, how about this? So August 1st is on a Friday. So first Friday of the month is August 1st. So are we actually going to get our unemployment numbers tomorrow? Now, I know I just segued into boring macroeconomic stuff that none of you all probably give a shit about, but it's important because tomorrow we are going to get the unemployment number. And if it's really good, guess what that's going to do to the market? It's going to jolt the market. So we get manufacturing data, so on and so forth. This is a good site for me because I can see like all the major market indicators that are coming. Okay, so I have an article that I want to go over here. So this is from Charles Schwab, who I use as my broker. So we're going to go over margin a little bit. This is like class now. This might be a little boring. So how does margin trading work for securities? This is a common question. Margin trading requires a margin account, and this typically requires submitting an application. Tell us something we don't know. We got that part covered. Posting collateral with your broker, you must pay margin interest on money borrowed. Margin interest vary among brokerages. In many cases, securities in your account can act as collateral for the margin loan. A Schwab account that's approved for margin trading must have at least 2,000 in cash equity or eligible securities and a minimum of 30% of its total value. Okay, so 30% of your total value. So if you have 500,000, that's 15,000. If you have a million, that's 30,000. Wow, coach is a genius. He just did that math like that. It's easy math, folks. Trust me. What do I need to know about Regulation T and other margin rules? Under Regulation T, a Federal Reserve Board rule, a trader can borrow up to 50% of the purchase price of securities that can be purchased on margin, also known as initial margin. Some securities have a higher margin requirement, thereby lowering the percentage that can be borrowed against the security. Let's see here. FINRA can establish their own margin requirements, blah, blah, blah. FINRA requires a minimum deposit with brokerage from 2,000 or 100% of the purchase price, whichever is less. Minimum margin. Okay. Example of buying on margin. So let's say a trader wants to buy 1,000 shares of a marginable stock that's currently traded at 50 per share. If the trader bought it with only the cash in their account, they need 50,000. So you need less money to be able to do this, right? That's what margin does for you. But if they bought the shares through a margin trading account, they'd only need to have 25,000. So it cuts the amount you need in collateral in half. The other 25,000 will be funded by margin, which is borrowed money from the broker. And for me, I guess with the margin I'm using, I don't pay any interest because I'm winning all my options trades. If the stock share price rises from 50 to 55 and the trader sold it to realize a gain of $5 per share or 5,000, they'd have a 20% return because they only had to use 25 per share of their own cash. See that? So a $5 per share return, which is typically a 10% return, you're actually magnifying now to 25%. So you're two and a half, or excuse me, 20% return. So you're 4xing your rate of return and you're not even trading 4x. Amazing, right? The other 25% per share was paid with funds borrowed from the broker, boosting the return. But margin cuts both ways. This is the downside. If the stock share price dropped and the trader sold it for 45 per share, they would realize a loss of 20%, double what the loss would be if they paid the stock entirely in cash. Oh, sounds familiar. Sounds like when we trade leveraged ETFs. The downside is maximized and the upside is maximized as well. Very familiar, huh? So it's amazing. Some of you may think I'm a great teacher. Believe it or not, I just did what a lot of my high school teachers did. I just basically read an article and sounded like I know what I was talking about, which I do know most of the words in the article, but some people think that's teaching. I'm trying my best, but technically I'm actually reading. So hopefully you all enjoyed that. I used to fear margin. Yeah, me too. In the past with traditional investing mindsets, but now that I embraced it earlier this year, I'll probably be saying the same thing. Who's that there? Is that like your wife in the picture? Is her name Venus? Is that because like women are from Venus, according to the book? Self-rescue survival. Just remember, leave a big chunk of the withdrawal cash account, cash amount as a buffer that directly correlates to the margin maintenance. Once your withdrawal amount goes to zero, you will get a margin call. That's exactly right. Yeah. So like he said, leave a big chunk of the cash amount as a buffer. That's important. Self-rescue survival. He said, agreed. I get nervous when I have less than 100K available. I keep at least 20K available most of the time for withdrawal to pay bills. Just curious, have you ever used a day trading power, which is like a day trade margin on Schwab? Explain further, because you kind of use some buzzwords there that I think I know what you mean, but just simplify it a little bit, because I've heard of like Power E-Trade and stuff like that. Day trading power. I got flagged one time because I made several like pattern day trades, and they said if you keep doing this, you'll be labeled as a like a pattern day trader, basically. That is my Filipina girlfriend. Awesome. I'm thinking about sourcing my future wife from that part of the world, actually. I retired early to the Philippines at 51 a couple years ago. Her real name is Venus. That's awesome. Sounds like a very Filipina name. I'm kidding, of course. Okay. Oh, I just lost a viewer. I guess I'm getting a little too ranty here. All right, how about this one? The risks of using margin. Well, there's none. It's all pie and peaches and roses, right? Because margin magnifies both profits and losses, it's possible to lose more. It's This is important, folks. It's possible to lose more than the initial investment used to purchase the stock. This magnifying effect can lead to a margin call when losses exceed a limit set either by a broker or the broker's regulatory body. This maintenance margin limit, which may be increased by the broker without prior notice, and that happens a lot, ranges from 30 to 40%. And I will caution you all, it's very common with YieldMax funds as well because the dividends are very volatile and unpredictable. Instead of the initial 50%, the SEC spells out a pretty clear message on its website. It says margin accounts can be very risky and they are not suitable for everybody. I would agree. Know what you're doing. Before opening a margin account, SEC suggests investors should fully understand you can lose more money than you have invested. Well, it's like options too. You can do that too. And they may be forced to sell some of all their securities when falling stock prices. Now, I've never actually had a security sold because I've always been able to come up with the money, but I just dabble in this. I haven't like gone all out. Similar to a bank loan, there's an interest charge associated with borrowing funds through margin. For more information about margin interest rates, contact your broker. Forex, we don't care about. That's a little too advanced for us right now. This is just basic margin class right now. Okay, so I think that laid it out pretty well. Let's do this here. Margin loans, investing and trading, short-term financial needs. So you can use it for all of that. This is a good chart here, actually. Purchase stock at 50, the price increases to 70 with no margin, 2,000 profit. See that? With margin, you've invested their money 5,000 and your money 5,000. So the total share value increases to 14,000, which then is a $4,000 profit minus the repayment of the loan. So basically you repay the loan, which is responsible. You don't want to leave that open. So you repay the loan and you doubled your rate of return. So that's pretty good. You see that doubling your profit? So it spells it out here. This is actually very good. 100 shares of the stock, 50 for 5,000. If it goes to 70, yeah, you only gain 2,000. But here, you see there, it's easy math. It's worth 14,000 because you doubled your investment. Therefore, your return is on double the amount. But then you can also lose twice as much too. So that's important to remember. All right, folks, I think that's going to do it. I think we beat this subject up pretty good. I hope that was informative. And I highly recommend considering this, with, of course, ULTY and MSTY, because like I just showed in the examples, your money, you're doubling, you're making like full-time salaries every month, or actually in some cases in 4 weeks between MSTY and ULTY. Furthest north you've been is Manila. Well, that's further south of the United States, and I'm assuming you're from the United States, so you've had to be further north than that. I'm in for 22, 27. That's awesome. Need to visit Subic at some point. Maybe that's where it is. Other than a trip to where? Lolo. Manila's the farthest south. Okay, well, I'll take your word for it. Use margin to buy stock and sell covered calls to apply premium. That's a genius idea right there by JW. Use the margin to buy the stock and then sell the covered calls to apply premium. That's perfect right there. That's a very responsible way to do it. He said in 1991, you're sorry. Yeah, you should be sorry. It's my side conversation, but I appreciate the fact that you accept the blame and you apologize for it because that means I don't have to. Love that. Philippines talk. Hey, that's okay. A lot of financial professionals, we like our women, we like our cars, and we like to, source from the best areas that we can, right? And let's be honest, American girls have a lot of baggage after all, except for the ones that watch this channel, to be clear. So let's see. We'll get paid 1775, one off 1776. She closed. Oh, it's a she. She closed at 1950 today. My cost per share is 21.66. That means I have capital loss of 32.45 minus distribution, still net loss of 14.70. Volcano. Oh, he is. I see. He is actually having side conversations here. That's okay. Hey, comments are good for the algorithm as long as you smash that like button with 2 thumbs. Do it as often as possible. Okay, well, good to know. All right, well, I think that's about going to do it for us. Absolutely. I already do. I have, friends that are from there, and they're great people. Um, all right, folks, thank you for tuning in. Like, comment, and subscribe, and join Discord, and we will see you all on the next one. The month is over in like 9 months, so we're actually not going to see you till next month. Even if I was to do a video 10 minutes from now, I wouldn't be able to see you all again till next month. Profound, right? All right, folks, like you said, like done. All right, I'm out. See ya. Take care. Bye.